I'm going to be talking to energy economist Ed Hurst from the University of Houston about what is a very controversial topic these days. What is OPEC up to? So, welcome to the interview, Ed.
Thank you.
In a previous interview, you had mentioned that you thought maybe OPEC was going to do what it did in late 2014 and then into 2015, which is open up the spigot, allow a bunch of, put a bunch of new oil supply on the market, drive down prices, maybe drive out the American shale producers, something like that. Now we're seeing a little bit of moderation of that take, where they're saying there's plenty of inventory storage to fill up. Things still look good, and the market can absorb the extra OPEC production. What's your take on that?
Well, I think a couple of things are working. One is Chinese consumption of crude appears to have gone down over this past year. Um, at one point, OPEC was touting 103 million barrel a day market. Now I think they're talking it's about 101. But again, their data collection has changed over the last 6 months. Um, U.S. production has plateaued and tapered. It is now dropping. The rig count in the U.S. is down. Uh, we all know in the U.S. that most of the independents require oil price of $70 or higher before turning a rig loose in the field. The dollar is down about 10, 11, 12% from the beginning of the year. So a $66 a barrel WTI price today is roughly $60 a barrel vis-a-vis last year. And so, and then we have the issue of Russian oil. President Trump has threatened India now with a 50% tariff, not just a 25 surcharge, but a 50% surcharge for using the Russian oil. But that oil is going to come into the market one way or the other. It always has. The sanctions have only just rerouted the tankers. We saw that with the sanctions on Iranian oil during prior to the nuclear deal during the Obama administration, when the sanctions came off following they're reaching a deal together. The price of oil actually went up. It didn't go down because, well, in order to get that oil in the market, Iran had to sell it at a big discount. And Russia, to be fair, is going to sell it at a big discount. They're not going to sell it at 70. They're going to sell it at 30.
Ed, this is my observation, and you're a veteran observer of this, so you can tell me whether I'm out to lunch or not. But in the conversation that I hear in Canada and the one I sort of monitor in the United States, the focus when we're talking about oil prices, where the oil market is going, are very supply oriented. And nobody really talks about these analysts that I read all the time, whether it's on Bloomberg or wherever. Nobody talks about the demand side of this, because China's whole strategy is to electrify its economy and help other countries electrify their economy. And that starts with transportation, with electric vehicles. And that is a direct competition for oil, for gasoline and diesel. And it seems to me that all this discussion about what OPEC is doing or isn't doing may make a little bit of sense in the short term, but even in the medium term, the short to medium term, China's demand is going to fall, and then probably it will influence falling demand in other global South economies. Am I out to lunch, or what do you take? What's
No,
your
I
take on
think
it?
you're on target. I mean, OPEC is looking at its oil as perhaps at some point a stranded asset. Certainly, the high cost producers will see it that way, and nobody's going to be a higher cost producer than the Permian Basin. So, and as we've noted, BYD, the Chinese electric vehicle manufacturer, is about to equal Tesla's numbers on a unit by unit basis across the EU. I mean, every one of those cars sold into the EU is a lot less gasoline sold to that community, and the electric vehicles are have a decent lifespan. And so it doesn't take but a few, and then a building number year in, year out to start eroding the gasoline and diesel supply uh, chain. We're going to see, I think, over time, local distributors of gasoline and diesel really racking the price up just because they're servicing maybe 25% of the automobiles in one particular area, or maybe that'll come at 50%. Um, we won't have gasoline stations on every corner like well the U.S. used to have, or like we still have with Starbucks.
And it looks to me, because we spent a lot of time talking to experts in other countries about their power grids and about power demand. And it looks to me that the growth of power grids, the growth of distributed energy resources, balcony solar these days. You just hang a couple of solar panels off your balcony, plug them into your outlet, and bingo, you've got basically free electricity. All of those trends are intensifying now, and it will continue to intensify out into the next decade. And none of that is a good trend for oil consumption.
No, and especially when you think about developing economies. And I'll go back to Y2K, which you may not remember, but I do. And so, across the United States and across Europe, we had the big mainframes that were all programmed with COBOL, common business-oriented language, and Fortran. And in the coding, everything ran out, if you will, at 12/31/1999. Um, the developing nations, the BRICS, they didn't have large IBM mainframes, and so they were working with PCs. They did not have this constraint. They didn't have to spend a lot of money to go back and reconfigure their back office. And so as these global South countries develop, they're not wed to a centralized power grid. They can do distributed power. They're not wed to a big refinery with a large distribution network with pipelines and tanker trucks traversing the countryside. It may be, and it is going to be easily in the next 5 years, a lot less expensive just to buy an electric vehicle, do your rooftop solar, or have a centralized solar field with batteries for each of the communities. We're seeing those built in the United States today.
And I was reading an analyst the other day, and this is actually a common comparison, but he was saying, look, the global energy system is essentially following the same kind of trend that the global telecommunications industry began, that followed or started and then followed in the early 90s, that led to the internet and then led to the decentralization of many of the kind of functions, economic functions that we had back then, that now, like streaming video, for example. And we're headed in that direction. And if that's the case, and I think he's got a very good point, that favors the Chinese model around, or Chinese approach to energy, as opposed to the American approach.
But yeah, it's going to be a quantum shift, if you will. The U.S., even with its vast cellular network for telephones, relies upon the old wires that were put in place by the precursor to AT&T, American Telephone and Telegraph, the monopoly. Those wires are still there. But now I've got a cell phone plan that accesses Starlink, Elon Musk satellite network. And I don't need anything on the ground to get a text off to you. Um, and so we're going to get there eventually. And for those nations that wind up not having to spend any money on it, well, that's a huge savings for them. And of course, for the US, for Canada, for Europe, that's a sunk cost. Um, it's there. Let's use it while we can. Maybe we'll dismantle it at some point. There was a lovely building downtown Houston that they built a huge skyscraper over 84 stories, and they kept the southeast corner of the building intact because that was the junction box for Western Union, the telegraph company. And to have dismantled that would have cost them 10 to $20 million back in 1982 when they built that building. And of course, Western Union was still operating as a telegraph company. That's not the case anymore.
Yeah, yeah, I couldn't agree more. The change is coming, and
Yep.
bring our argument back to OPEC. It seems like our perspective on OPEC is coming through the lens of supply. We're always looking at, what's the market doing? Is it bearish? Is it bullish? Are they buying contracts and all of that kind of thing? And we're not looking over at what the customers are doing. And it's when you look at it from a demand point of view, that lens, you get a very different picture. And I worry that both Canada and the United States are have kind of distorted the picture they're getting by recommitting essentially to a 20th century energy source, the molecules, the hydrocarbon molecules.
Right. Well, certainly the administration in Washington is not very progressive in terms of its outward view looking ahead. Um, I'm pretty certain that the OPEC ministers know what they're doing. They could put the price of oil back to $120 a barrel easily, but that would really just accelerate the transition away from transportation fuels. If they run the price of oil down to $45 a barrel, $50 a barrel, will they take an operating loss? Maybe a little bit. They will certainly damage the U.S. and Canadian oil patch, but they will really damage the EVs for at least the next several 3 or 4 years. So OPEC's going to be balancing this. When will they make the decision that okay, we're going to be reducing production? We know it's going to be there. What's our happy price going to be? $50 a barrel, 40? We know that the OPEC nations, the rig count in the OPEC nations has not recovered to the pre-pandemic levels. We know that OPEC nations are underinvesting in maintaining their production. We know from the meeting last month that the OPEC wells have a 5.5% decline rate. So without reinvesting, we know that OPEC production will taper. That's going to lead to a higher price, at least in the short run.
Let me run this past you then, and we'll end the interview with this. Is it fair to say then that 2014, 2015, 2016, the OPEC's goal was to drive the price down, drive the American shale drillers out of the marketplace? Didn't work.
And they did a fine job of it. It was very painful.
Yeah, it was very painful. We were remember in Alberta remembers very well. But the this time around, it's not that strategy so much as it is, as you mentioned, finding that sweet balance where it can maintain a decent price for its own product and at the same time not send incentives to markets to that would force consumers to then adopt more electric transportation. That seems to be the calculation these days that OPEC is maybe dealing with.
I agree with you. They are looking at the consumer makeup. And the U.S. is going to be less of a market for oil going forward. Certainly it's going to continue to be a big market for natural gas for next several decades. Um, but the developing world, where the growth is coming, where per capita income is exploding, it's going to be a electrified economies.
Ed, thank you very much for this.
Good to see you. Thank you.